Okay, recording this video, it's well after the close on Tuesday, the 16th of May 2017. Well, what a day. Not so much the day, but the after-hours session. Holy heck. We had this Comey memo business kind of come out, and the market has sold off. We're down in kind of the 80s on the E-mini, so we're certainly going to have a gap down open for tomorrow's session. Anyway, time to revisit the 2400 level again. Last time we talked about this was around the 9th of May, and 2400 level was absolutely key, and we were kind of running out of steam. And we're back at 2400, kind of testing it again with Tuesday's activity. So we are in the middle of this rebalancing, and this thing is kind of working out nicely on everything but equities so far. So this was the 9th of May when I put out this video talking about rebalancing. So there's the 9th of May, just after the Rambo pattern on the equities side. And you can see everything else has bounced nicely. So gold and silver here, cyclical supports kind of come in there and there, and we bounced from there. Crude and copper, cyclical support came in there, and you can see it just underneath this bullish divergence pattern as well. Both of those came in. We had nice bounces from there. Same thing, we overshot at a fraction on bonds, but cyclical support, and we've bounced from there. The one that's not budged very much is equities, but with this kind of news overnight, certainly we're kind of down at the 84s, so maybe that's the break that we're looking for to kind of get this thing going on the downside. So rebalancing kind of on the way, and you can see now we've reached nice overbought kind of levels on bonds and the yen carry trades. This is equities, SPY versus bonds, TLT. And you can see here we've reached overbought on this little momentum indicator, and that's that little white bar that's kind of come in. So overbought, overbought, overbought. Same deal on the Japanese yen, and with this one we've had overbought for a few days going on there. So you can see that overbought, overbought, overbought. So we're still due for this, but it's taken us a while. I mean, that's what happens. Market does take a while to decide what to do. This is the overnight activity that you can see. This is the Comey memo break at the 96 kind of level here. So the last time we were talking about a potential move to the downside was after this kind of false break into 2400, exhaustion buy, bearish divergence, and we tested back up on all those kind of weak patterns, and we started to break, but no, they held it, and they pushed it back again into 2400, and up here now we have more exhaustion buy patterns, pullback to end of trend on the lowest time frame, which is that gray dot there, pullback to end of trend on the intermediate time frame, which is that little larger white dot, all happening around cyclical resistance on the highest time frame, and that's that solid white dotted line up the top there. So we tested into it again, and this time it has failed because we have dropped through the first cyclical support on the lowest time frame, bang, into this downtrend. So we'll see what the European session does to this, whether we get a bounce back up or what kind of happens with tomorrow's activity. But 2400, we've had another go at it, and I think it's failed, and we'll see where we go from here. Now, this was today's activity. So this is the Comey drop at the end of the day. So there's the end of the day session, bang, and we kind of dropped into this downtrend below this important cyclical support. But look at this. This is kind of a mirror pattern to what we had. It's not going to work. Sorry about that. This is a kind of a mirror pattern to this pattern here, with cyclical resistance on the highest time frame and the other end of trends on the low and intermediate time frame all happening at the same time. And that was exactly the same pattern that we had at the beginning of today. We have blue professional bars into there, cyclical resistance on the highest time frame comes in. There's our pullback to end of trend on the lowest time frame, pullback to end of trend on the intermediate time frame, and then we drop into this downtrend. That exhaustion cell is getting the move going. This exhaustion cell is picking it up, and then the bullish divergence kind of comes in, and we break into a little bit of strength here. But we find resistance again on the highest time frame, and we break into another downtrend here that kind of played out at the end of the day. Anyway, the other things I want to talk about are dollar index, because all of a sudden all of those signals have kind of come good. On the commitment of traders, I want to show you three charts. The first one is the euro. Here we go. Euro chart, weekly, commitment of traders, and the commitment of traders, guys, have been going reversing their positions and now have kind of broken above zero, and we put in another little bullish divergence here on the commitment of traders. So that is why we're having strength on the euro. We've also got strength in the pound, but the position of the professionals is not as clear cut. They've not kind of gone above the zero level on the pound as yet, but I'm still committed. I think still the pound has seen the bottoms down here at 120, which is where they kind of defended it down here, and we're kind of ready to break away or continue this breakaway to the upside. So that's the euro and the pound. And the other one to show you is equities. And equities this last week, they flipped positions below the zero line now. So we've kind of changed our tune on the equities side. So just watch out on that. But all of this has meant that the dollar index signals have now kind of come due. So this is dollar index on the multiple time frame view of the world, and the last signals that we had were pullback to end of trend on the lowest time frame, pullback to end of trend on the intermediate time frame, all happening around cyclical resistance on the highest time frame after our exhaustion buy, bearish divergence, and there we've had our start of the weakness is that dotted white line, and there's our low risk entry point. Bang, just as we come back up. And then when we start breaking supports on the time frames after that, that's confirmed downtrend. And that's what we've had here. So we've had weakness, a low risk entry point, and then as soon as we're breaking supports again, bang, we're confirmed in a downtrend. And here we go. We had today's activity on dollar index. They just let loose. We kind of dropped to new lows. And so we're having bounces in the other big currencies. The first one is the euro. Again, let me show you this on the multiple time frame chart. Pull back to end of trend on the lowest time frame, and then we cycle through, ripple through, pull back to end of trend on the intermediate time frame. We've got support on the highest time frame that we busted through, but we've got exhaustion, sol, and bullish divergence, and a flush pattern. We have the first sign of strength, and that's why these bars flip to red, and we have a low risk entry point come in right down here at 106, and then we start busting up above resistances, and there's our confirmed uptrend, bang. And so 106, 108 was kind of the area to be getting in at, and now we're up at 111 after the French elections kind of made good on Macron, and this thing is on its way. Japanese yen, this is showing strength at the moment, but we did have some severe weakness a few days ago that busted us into this kind of below support right here. So I don't think the Japanese yen is quite as strong at the moment as the euro and the pound kind of picture there. So just bear that in mind. Here's the pound after, I talked about this. Let me go back to this. Pound ready to rally. 21st of January. And I said, look out for the pound. And also look out for EWU, which is the ETF, and I'm going to show you that one. So when was this? This was back 21st of January. So let's just find that on the chart. January, back here. There we go. So 21st, so I was recording it on the weekend. So that bar there was a really important bar, and I think it was because it was, that blue professional bar. So there we go, the 17th to the 18th, kind of around there. We busted up through the highs of that bar. That was really important. So that strength said that 120 was a critical level that they decided to defend. We've had all of our exhaustion sells, bullish divergence, and flush patterns kind of come in, and then with the activity last couple of months, we've had a bust above resistance here, 2 time frames being broken, confirmed uptrend, and all of a sudden 120 was the go back here, and we're heading up towards 130 on the British pound. And then when I did this video on the pound ready to rally, I was talking about if you wanted to play this, one of the ways to do it is through the ETF, EWU, which is tracking the FTSE. And once you got the equities market in the UK and the British pound kind of going together, these things really start to kind of move. And so back here in January, down here, we'd had all of this strength kind of come in. Highest time frames were holding. We'd had our exhaustion sell, bullish divergence. This exhaustion buy is getting the move going. That activity is everybody getting on board this move. And now you can see with the activity that we've had over the last few days, this thing has really taken off. So it'd be interesting to see what all these markets kind of do if we have kind of weakness in the US equities for a few days, whether there's a good opportunity to jump into some of these other kind of markets, some of the emerging markets, or EWU or the Europeans kind of ETFs. We'll kind of have to wait and see. But that strength in the EWU and the British pounds really kind of played out nicely. So I'm quite happy with that video I put out back in January. Anyway, so there we go. It's going to be an interesting open for tomorrow. Just let's hope for good range, good volume, good speed in the market, and then that'll mean good trading. So I hope your trading is going well. Looking forward to Wednesday's trade.